Yes, I think that this is a systemic problem in the Chinese economy. It's not just about one firm. This is about China's real estate sector, which begins with local governments selling land to government affiliated or favored land developers who get financing from government affiliated or favored financiers and then sell to local people. And so this is a business model that's flawed. It's not just one company that's out of control, and the entire business model is going to be a problem in a country where real estate is a disproportionate amount of GDP in the economy.
So what are your expectations then when it comes to this in terms of China's ability to contain the problem, or is it going to spread to other real estate developers and to overall the market? As you point out, real estate is such an important asset class in China, not to mention an important part of the economy.
Well, if I was someone in China thinking about buying an apartment, I think I would probably hold off watching what's happening with Evergrande. But I think that the central government is going to address this in a Chinese way. They're not going to allow some kind of catastrophic collapse. What China has done in the past, for example, when state-owned enterprises have failed, is they merged them. When the stock market went south, they got the national team of Chinese affiliated financiers to come in and prop up the stock market. HNA has failed, and they've done asset sales. So they are going to prolong the situation, try to create a glide path. The government thinks it has the responsibility in a state-led economy to guide all economic activity. And so I think they're going to have a prominent role, but it will not be a Lehman moment kind of scenario.
Yeah, Ben, I want to get your thoughts on this, too, because you don't think this is going to be a systemic collapse. But does it not speak to some of the risks that are in the market structure and the Chinese economy more broadly right now? An economy that, by the way, perhaps is being overshadowed by this news, but is slowing.
Certainly. I mean, this is a refresher and a wake-up call to the economy. Historically, there was culturally, real estate was really a favored store of household wealth for individuals here. And the Chinese government has, I think, acknowledged that this was going to be a challenge in the long term and had already been taking actions to pare back that by, for instance, capping the amount of loans that banks could issue, by reducing the amount of homes that people could enter or could acquire, particularly here in the tier 1 cities. The China savings rate is amongst the highest in the world. And also, obviously, the percentage of household wealth into real estate is in excess of 78%, whereas in the 20s in the United States. And so I do think this ultimately will lead to a redistribution of how wealth is managed and held, potentially more into the public markets. But certainly China is going to have to take significant actions here to get healthier around this, as they have with the SOEs and as they were starting to several years ago already around real estate.
Hey, Jeff, a little more macro. I wonder what this entire episode and the business model troubles that you're talking about does to China's ability to attract investment from U.S. companies looking to leverage their consumers or even to hang on to supply chains, which, as we know, are getting smoothed out all around the world.
Well, this is the real effect of something like this. I think there won't be a dramatic moment, but I think there would be a long-term drag on the economy, and that could potentially affect consumers, their ability to purchase. When the financial system gets strained, suppliers find it difficult to finance their needs and to sell things. And also internationally, there could potentially be an impact in terms of, say, the Belt and Road Initiative, which depends on financing that a lot of Chinese already think belongs at home and not going overseas.